Hey guys, it's Mrs. Lamphere, and we are looking at section 9 of unit 4 called Banking Procedure. And in this section, we're going to look at cash management strategies in terms of planning, protecting your cash, how to make deposits, endorsements, how to write checks, and things of that nature. So, if you have a checking account, this might be kind of a refresher for you. If you don't have a checking account, some of this might be pretty new. So cash, as we know, is a principal asset in our business. It's the most liquid form of itself, so we need to make sure that it's protected and that we know where it's going within our business so that we're not losing or mishandling the cash in our business. It's the most liquid form of all assets and is listed first on the balance sheet. The ability of a company to service its debt, purchase inventory, pays taxes, and cover payroll depends on the availability of cash. So it all depends on how much cash we have available in order to cover these expenses. Protecting cash, therefore, is essential for the success of every organization. So again, we want to protect cash, which includes protecting cash from theft, fraud, loss, waste, and forgery. So there are some both internal and external controls that we can use in order to protect our cash. And I'm not going to go over all of these, but basically internal controls are things that you can do internally inside your business in order to track your cash. Some suggestions are restricting access to which employees handle cash. You don't want too many people to have access to your cash accounts, just because then you're kind of setting yourself up for immoral or kind of ethical issues as far as people maybe taking cash for their own personal use. So restrict the number of persons handling your cash. Ensure the employees who handle your cash or cash records, make sure they're trustworthy employees that you feel comfortable with them dealing with your cash. Prepare a budget, track your receipts for any cash payments or balances. We've talked about using source documents in our journaling in order to see where your money's going and have that on record. Use a cash register, deposit all cash receipts daily in the bank. So again, these are some internal, so some things you can do internally within your business to help kind of control and protect your cash. Then there are also some external controls, so make sure you have a bank maintaining control to protect the funds, verifying the signatures on the checks for accuracy, and customers remitting their dues only to authorized employees. So make sure, again, making sure that only certain employees are authorized to deal with your cash funds. Okay. Check accounts. Checks have largely replaced the use of cash in the settlement of accounts between people and businesses. And we talk about in personal finance class that even now checks really aren't used that often, especially when it comes with personal finances. A lot of times credit or debit cards are used in place of checks. But checks are still being written. So we're going to talk about how to properly write a check and using a checking account. A person or business that opens a check account with a bank and conducts regular banking transactions is called a depositor. So if you go to the bank and you start a checking account with that bank, you are the depositor. A check is a written order from a depositor. The order requests the bank to pay the amount stated on the check to the person or business whom the name is written on the check. So when you write a check, you're getting this little piece of paper. Let's see, I have a blank. Here we go. So say you're writing this check, you're basically telling your bank to transfer whatever amount of money to this certain person, and that has been authorized by you, and you'll sign on this line here. A depositor needs to first open a checking account and ensure that there are sufficient funds before issuing a valid check. We're going to talk about more in the next section about when there are not sufficient funds available and how that would be called a dishonored check. You might find that on your upcoming quiz too, so make sure you write that down. A check with insufficient funds would be a dishonored check. Okay, opening and using a checking account. Basically, they're going to need these three things in place in order to open a checking account. First is going to be the signature card. And so with this signature card, you're authorizing anybody who signs this card. You're saying that I trust this person and they can write checks for my business. So Whoever then is signed on this card, the bank has to double check and make sure if someone ever goes to cash a check from your business, they have to make sure it's signed by one of these approved signatures in order for them to deposit. When opening a checking account, you're going to get a checkbook. So basically a book full of checks like this. And it will, let's see, checks are printed and packaged together in a checkbook. Each book has several detachable checks attached to check stubs. And we'll look a little closely here at check stubs, numbered in sequence. The stub shows the date, page's name, the amount, and the purpose for which the check was issued. So let's take a look. This would be a check written and along with a check stub. This to the left is the stub. So you have the check to the right. This is what gets torn off and handed to the person that you're paying, so Walter Smith. And then you have this check stub tracking all the information on the check so that you have it for your own personal records as well. Because once you write this check and you hand it over to Walter Smith, you want to make sure that you still have that information on hand as well. So that's why you copy it over into this check stub so that your records are up to date as well. You're also going to make sure you have an ABA number. So an ABA stands for American Bankers Association, and the number is the number printed in the upper right corner of the check, the fractional number in the upper right corner of the check, just below the check number. So you can see here's the check number 2670, that's the check number, and then this fractional number below would be the ABA number. And so basically the ABA number identifies the bank and helps to sort the checks. The ABA number is also printed at the bottom of each check for electronic sorting. Okay, preparing a bank deposit. So a deposit is when you put money into the bank. So deposits in the bank protect currency, coins, and checks. When you deposit money, you need to fill out a deposit slip. And I have a picture of a deposit slip here. So this is what a deposit slip looks like. You'd fill out the date, the name, your account number that you want this money to go into. You put in how much cash you're putting in at that time, and then you list the checks by check number and amount. You total up your subtotal there, and that's how much money you would hand over then your cash and your checks along with this deposit slip to the banker, and they would get that money deposited into the bank. Here's another practice activity you can do on your own. Okay, information on check stubs. So we looked at check stubs already. We're going to kind of break down now the information that's on the check stub. Recording deposits. So checks can be issued from either standard checkbooks or from pads of checks prepared in the duplicate. The original check is issued to the payee and duplicate is retained for a bookkeeping record. So when you use the checkbook, the checks are detached in the stubs from the stubs that are issued. So before detaching the checks from the stubs, ensure that your stub is filled out. So basically this is saying you want to record even your deposits on your check stub. So make sure the stub is filled out before the check is even written. So you want to make sure you have all the information on there. Shows the correct date, payee's name, amount. Completed stubs reflect all check account transactions. So again, here's that completed check stub. You have who the check is going to, the date, the amount. Then you have an updated balance. So this is the balance that was before you wrote the check. And then you copy all the information from the check that's being written. And then you have your new balance there at the bottom. Okay, when writing a check, use the printed form issued by the check. So make sure you're using an official check. Use ink. Do not or type it. Never use like a pencil where someone could erase or make changes on your check. And then complete the check stub again before writing the check. When completing the check stub, again, this is just kind of reminding you what all information to carry over. So again, the payer's name, how much the amount's for, the balance, you're going to add up the new balance, so on and so forth. When writing the check, write the date for which the check's being written, paid to the order of, that's who the check is going to. Then you write the amount of check in numbers, and then also you're going to write the amount of the on the check in words. So here you'll see the dollar amount for the check that's being written, and down here you'll see the amount in words. And we talk about this in personal finance class where The bank is supposed to be looking at the amount in words. And the reason we do this is because just in case this number gets tampered with somehow, because it's going to be a lot easier to maybe slip another one into that amount than it would be to adjust this written amount down below. So banks should be looking at the written amount when they're cashing the check. Okay, then to void the check means to cancel the check. So if you made an error on the check, you need to make sure you write the word void across it. So if you made an error and you tore that off and threw it in the trash, someone else might be able to grab that and cash it. So you want to make sure you write void in big thick letters over the check to make sure no one else tries to cash it. A couple more things to go over here when we're endorsing check. When you endorse a check, you're basically transferring ownership then of the check. The person that the person who signs the check is the endorser, and the person to whom the check is transferred is the endorsee. So for this check right here in this example, Lewis Blake is who the check is being written to, and it's signed by John Roadways. So John Roadways is the endorser, and Lewis Blake is the endorsee. There are different types of endorsements. I'll go over these real quick. Blank endorsement is, in a blank endorsement, the depositors sign on the check without specifying the name of the endorsee. This is also called a general endorsement. So basically it's up for anybody to sign in order to get that check and the funds transferred over. This is not the safest type of endorsement just because basically anybody that grabs hold of that check could then sign it and deposit it. There's also a special endorsement. This endorsement writes the names of the persons in who the favor of the endorsement is made. So in this endorsement, the amount of the check is payable only to the individual or business whose name appears in the endorsement. For instance, this Lewis Blake check. So on the back it says paid to the order of Lewis Blake, and then he has to be the one to sign this in order to deposit the check. That was a special endorsement. Then we have a restrictive endorsement. In this restrictive endorsement, you write the words on the check that restricts the right of further transfer to any other person. So for a restrictive endorsement, this check is only for deposit to Lewis Blake. He could not transfer this check to someone else. He would have to cash this check on his own. So again, these endorsements very rarely is anything other than a special endorsement used. Usually it's only when the check's written to that person, that's the only person that can sign and deposit that check. Okay, make sure you check over this list of key terms that could be coming up on your quiz and unit exam. These are the terms that we kind of talked about throughout this section, so have those ready to go. And we will discuss the assignment for this section in our Class Connect tomorrow.